Hey folks, Dan Frio here with your market update for November 8th, 2024. So yesterday, mortgage rates, as you see, they went down a little bit. But here's the concern. The Federal Reserve cut rates yesterday. Well, remember, if we rewind back to last time they cut, mortgage rates kind of just halted that day, and then every day after it was up, and away. So now what we're focusing in on is the Federal Reserve cut yesterday, and mortgage rates, as you see, they went down a little bit. Will they hold? Okay, so now that's what our focus is on right now. So let's get over to the news. Traders see a good chance the Federal Reserve will cut again in December and then skip in January. I'll be a data-dependent person on that one. Okay, right through here. Here's what we're talking about. Here's the bond market. Here's the MBS market. This is the actual mortgage bond that basically makes up your mortgage rate. Okay, so when this thing goes up, mortgage rates come down. So there's a nice rally into this market. Well, will it hold? That's the point that we're trying to focus in on right now. The biggest culprit right here is our national debt. There's way too much debt, so there's way too many bonds in the market for investors to kind of buy all this stuff up. So I found a nice interview this morning right through here. This lady is with JP Morgan, and I couldn't have said it any better than she said. So this is our highlight video of the day. So when she's talking, I'll give you some other highlights and things like that behind the scenes. But when she's done, I'll give you the kind of the layman's term of this, and then what our expectations are for maybe the next couple weeks, just so some things settle, because there's a lot of transition going on, and that's also what she speaks about. So let's get over to the conversation or the interview, and then we'll be right back to put all this in, and we'll at least make it make sense for you.
All right, joining us now with more on the Fed and the fixed income market, let's bring in Priya Misra. She's fixed income portfolio manager at JP Morgan Asset Management. Another 25, we're on the right track?
Yes, and I think a few more. We heard from Chair Powell, monetary policy is restrictive. If it's restrictive right now, it's restrictive with another 25 basis points. I mean, any policy mix that we're going to get from the new administration, we're only really going to hear about that late next year. So I think the Fed is on a steady path. As they get closer to that neutral rate, I think they can slow down. So it could be 25 a quarter. But I think there's still a lot more rate cuts.
Okay, so remember, she just made a comment, and I'm going to guide you along this interview. She made a comment of what's the neutral rate. So that's what the markets are trying to figure out right now. At what rate is the Federal Reserve kind of focused in on? And when they get to that rate, on the federal funds rate, what will they do? So that's what she's talking about. What is the neutral rate that the Federal Reserve is going to cut their rates to?
Is the neutral rate changed, given that ever since the Fed did the jumbo cut, all we've seen is the long end tick higher, the 10-year?
So I don't think it's the neutral rate, it's the fear around the deficit. And, let's be clear, the deficit is on an unsustainable track. I don't think the level of debt is an issue. There's a lot of demand. There's a lot of money that's sitting on the sidelines. As the Fed cuts interest rates, those money market yields go down. That money is coming into fixed income. I think makes a lot of sense. You ask about that neutral rate. I think if we get the policy mix, and let's see do we get more tariffs? Do we get deregulation? I do think deregulation can raise our star. This is stuff we're going to look at the data, and I think the Fed doesn't know where that neutral rate is. I'm in the 3.5% camp. I think the Fed is a little lower than that. We're at 4.5%. So there's still a lot of room till we figure out what that neutral rate is. We have to look at the economy. I would say the labor market is slowing. It's still normalizing. And that's sort of allowing the Fed to cut, maintain the soft landing. And then we have to look at the entire policy mix. But the one point I'll highlight, a lot of us are looking at 2016. The inflation backdrop is so different today. The debt backdrop is very different. You have Elon Musk that's going to try and set up Doge or whatever, try and get, spending cuts or efficiencies. I think even President Trump knows that he doesn't have a blank check from the bond market. The bond market, you talk about this move, a lot of this move is the bond market saying, not so fast, we're not writing you a blank check. And I think the administration is going to understand that and try and find some pay-fors as they sort of think about tax cuts.
The Fed doesn't seem to really have a very good, record or ability to look forward. So now the election, all the things that they're doing were based on things that have already happened. Should they be doing anything differently based on the proposed policies of what a Trump administration looks like? Suddenly it seems like all bets are off for what they've been.
Right, and I think Chair Powell was asked a lot about that. I am sure they're doing scenario analysis. But look at everything that's being talked about, right? From deregulation, tariffs, trade negotiation, taxes, do we get fiscal stimulus or do we just get a redistribution? Does it come out of efficiency? Do you just extend the tax cuts or do you actually get more tax cuts? I think it is so uncertain that for the Fed, I think everyone talks about them being data dependent. They're really outlook dependent. Did their outlook change? I don't think so. Now, did the distribution of outcomes become a lot wider? Yes, and I'm sure they're going to analyze it. But as Chair Powell said, they're going to look at what are the policy proposals, what's actually making its way. Are the tariffs going through as proposed, or is that a negotiating tool? I think we don't know. And as they think about inflation growth, they've got the dual mandate. I think we'll be hearing a lot more from them as we know what's the #1 priority and what actually is taking shape.
Right.
Fantastic. So she put it all in context. It's uncertain right now. So here, I watched basically a thorough debate last night. I think what happened also was the markets they didn't know what the outcome of the election was going to be. So they prepared for one way, and then the Trump victory kind of turned that upside down, and it moved the markets, and now that's why you're seeing this rally in the MBSs right now that you're seeing here. It's people just kind of jumping back in, saying, okay, we were on the wrong side of the trade. That's the focus I got yesterday. I'll try to give you that video later this afternoon. It was pretty intriguing how they talked about it and explained it all, and it made quite a bit of sense. Okay, so here's what they're saying. They're saying the national debt is way too high. Look at this thing. We're going to be at $36 trillion here shortly. It's clicking away like hotcakes there. The CME FedWatch tool is saying there is the December is looking like now a 66% chance that they might cut. But in January, they will cut the 25 basis points. So this is the projection. We're a long way away. This is basically telling us what the Federal Reserve is going to do at the next meetings throughout the next year. So let's worry about this maybe in a couple weeks. Let's just see and make sure that the trends we're seeing right through here sustain. So we're up 10 ticks right now on the MBS markets. That means mortgage rates will probably tick down just a little bit more. We might be about 6.95. Can we hit 6.9 by the end of the day? We're going in the right direction. That's all I got to say there. Let's get to the equity markets and see how they're doing. Wow, the markets are holding all their gains and they're continuing to grow off of that. We have the equity markets right across the top here, all in the positive ranges, other than the Russell 2000. It's down 4 ticks. But again, the VIX is at 14. That basically means they're just chilling out on Wall Street. They're not concerned about a lot of things, which is fantastic news. We don't like, as the VIX spikes, volatility in the market goes crazy. So right now, the markets are saying, okay, we're fine with everything. We go to cryptocurrencies. It's down a little bit, but it's at almost $76,000. Remember, we bought this thing, in our mock portfolio about 2 months ago. We bought this at $64,000, so we're up 11,000 from there. We'll try to do Stock Talk today, but we will be back with Stock Talk Tuesdays on next Tuesday, where we'll discuss all these things, and maybe we will take a dive into cryptocurrencies and maybe Bitcoin at that time. Let's see how oil is doing. Oil is also down $70 a barrel. You know how I feel about oil. Oil prices are coming down. That's going to help tremendously on the inflation front. So now you're out there and you're trying to think, okay, is this a good time to buy, maybe my first house or my first investment property? This is my turn. Okay, so what am I? Who am I? Actually, I'm a loan officer, believe it or not. I'm in the residential space. So if you're out there trying to buy that first house, maybe that first investment property, you might even be looking to refinance. We do live events every Wednesday. You see how many people are in the mid to high sevens right now. Maybe pick a spot, check what the cost would be for a refinance. And if it's not too much, maybe refinance now. And if rates continue to go down and down and down, you can do it once again. But let's go over to my website. Here's how you find out about me and my team. Okay, go to therateupdate.com. Pretty cool sections up through here that we have. If you already have a loan estimate and you want us to compare it, so let me explain again who I am, what do I do. Okay, so my name is Dan Frio. I work at a company called ServBank. ServBank is the 10th largest mortgage servicer in the entire country. We got $20 billion in loans. The unique thing is we're also a mortgage brokerage. So I'm set up with about over 50 different lenders. So think of it this way. By using us, it's one application and one credit pool. We're going to shop your loan over 50 different lenders. Who else can do that for you? Do you have the time to do it? So let us do the heavy work for you. So check it out. Go to therateupdate.com. If you're looking to buy that first house, you got to check out our grant finders. Okay, there's a national one we handpicked. There's 3 in there that basically is the freest money you can get for down payment assistance. You can use it for down payment and closing costs. And then there is a Chicagoland one. If you live in Chicago and you make about $85,000 or less, anywhere in Chicago, I'm talking Cook County, DuPage County, Kane County, McHenry County, check it out. There might be a little bit of free money there for you to use to help you buy that first house. But go to our website if you want to get the ball started. You can hit the Apply Now button, or you can scroll down and you'll find our 800 number right down here. It's 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. We would love to help you. So if you got any questions in regards to a mortgage, investment properties or such, give us a call. Love to talk to you. See you later this afternoon at the closing bell to let you guys know how this mess ended for the day. Take care. See you then. Bye-bye.